Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Spill. Few brands hold the history of Levi Strauss jeans. Notably, the company posted only one loss in the last 8 years. After the company released earnings last week, the stock's searches amongst retail investors for apparel companies surged 239%, marking one of the most dramatic increases in search volume in the last several months. This is particularly interesting given Levi's stock isn't a momentum name nor actively traded. In fact, it's most well known amongst value investors. And given the intrigue, we dug into the company's financials and trading history to see what we could find. Now, most of us know Levi Strauss for the Levi's brand Denim jeans. But what you may not know is that the company also owns Dockers and Denizen. That said, jeans are the company's main revenue generator. In the most recent quarterly earnings call, management noted that demand for products outstripped supply by $50 million, or 3% of revenue, due to supply chain constraints. They also noted that the company locked in a second-half cost of goods sold slightly higher than 5%. However, the company continues to raise prices to handle this, guiding for gross margins in 2022 of 0.15% to 0.3% higher than 2021. Starting with the financials, we note the consistency of the company's revenue and earnings growth over the last 8 years. While not massive, the company's 3-year growth rate prior to 2020 was around 8%. Year-over-year revenue growth in 2021 came in just shy of 30%. What's also notable is the earnings per share 5-year average in 2019 was 29.17%. Today, the company boasts gross margins close to 60%, with cash flows more than 50% higher than its best years. Levi carries about $1 billion in long-term debt and another $969 million in capital leases, compared to $902 million in cash and about $898 million in inventory. This tells us management has ample room to invest in digitization and omni-channel growth. Now turning to valuations, when compared to the rest of the consumer discretionary sector, Levi's stock isn't all that cheap, nor is it ridiculously expensive. And taking a look at the weekly chart, we find a stock that's in a clear downtrend coming off the highs it put in last spring. The two support levels that caught our eye came in at $20 and $16.50, the latter being an ideal location to build a position. In our opinion, this is a 7 out of 10 stock that we like and want to keep on our watch list. It's just a bit overpriced at the moment. That's why the $16.50 support area makes a lot of sense from a technical and fundamental point of view. Click and subscribe to the Spill newsletter to get the full breakdown.